Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 1st of September. All right, now hopefully September gives us some nice trends to work with. Now, just having a look at the news here, just to kick you off, the dollar falls to more than 3-week low with payrolls in focus. Now, don't get too fixated on some of the news, right? The currencies are just going through this motion. Dollar started to weaken. We're starting to get these currencies moving backwards. It's not like a massive clean out of the dollar. They're trying to sort of create a bit of hype ahead of the non-farm payrolls on Friday. The main job is really focusing on what you can see is happening in the market and what you can piece together. Okay, now if I just change screens here, just having a look. Now, the easiest thing to do, you can see the currencies here, a bit of a risk on, risk off profile where the dollar block is going up and the dollar pairs are going down, right? The general move in the equity markets in the North American session, slightly down, right? It's not massive, but we are starting to see a bit of a move. But as I said, the cash is moving out of the dollar. Now, if anything, the bond prices are a bit lower, which means the yields are a bit higher. Okay, we had a little bit of a mixed bag of data here. Coming back to the US numbers, where I put them. Okay, the Case-Shiller house price numbers, better than expected. Chicago PMI a little bit worse, and then you got a weaker US consumer confidence number there as well. So really mixed data, but I don't know whether it was the housing numbers or whether it's just the cycle of the market. Those higher bond yields, okay, would push down US equities. Okay, it's slightly higher interest rates. And that's what we're sort of looking at this point. And just on the dollar there, on the dollar index, I've got this on this page. You can see it's drifting down here, and the prior sort of support levels, you can see where it's obviously broken down through those. It is moving lower, but as you can see, it's sort of bounced back a little bit in the latter part of the session. So the dollar index, yeah, the fact is it is drifting lower as we head towards the non-farm payrolls. I would expect this to probably turn around before we get to the payrolls data and end up back above around 93.20. You'd sort of suspect a bit of a dollar clean out ahead of the non-farms and then sort of back to sort of mid-range levels as we get closer to Friday. But let's just sort of look what we've got to work with today. Now, okay, let's just focus on the dollar block down here. The dollar block, okay, euro, sterling, Aussie, Kiwi, all moving together quite nicely. You can see those light blue, if you can see those light blue old trend lines, you can see where it's sort of, there's been the action and now the red ones are the current ones. We've got, let me just turn that off. We've got these pairs all moving higher, right? This is a good thing, right? I still don't think there's any major change in the US fundamentals. We've got the employment numbers this Friday, give us a check whether they're on track. Then we'll have the inflation numbers in a week or so. But these are all sort of just correcting back the move, this strong dollar move we saw a week or so ago. The dollar's just falling, drifting back down. And as you can see on this dollar index chart, okay, it's still within sort of recent ranges. So don't get super psyched out about this. I think if anything, this is really building up to a nice opportunity. And where I can see that is, I'll come back and have a look at what we are expecting out today. I think everything up until Friday will be short-term moving trading opportunities, but those short-term opportunities you'd expect to probably go with this current move. Although on euro, sterling, we do have resistance a little bit higher. That may sort of stall things, but I'm thinking this is perfect because we get a flush out of all those stale long euro, sterling, Aussie, Kiwi positions. Right. And if we get really strong non-farm payrolls, then the easiest trade is going to be break trades down through these support trend lines, which are just developing this week. Right. It really comes down to the non-farm payrolls. And with that expectation, you can expect these things to sort of really slow down as we get through, particularly through Wednesday trading in North America. Okay. We'll start to sort of edge closer towards the data. And that's when, the news services start to create further hype. Now, looking at where the action might be today, There's Aussie GDP figures. Once again, I'll keep saying this all the time. The RBA are not in the game, so the GDP numbers, yeah, it can be a little bit reflective of what's going on, but there's other geopolitical issues going on, like the pandemic, lockdowns across major parts of Australia. So GDP, if anything, it's a short-term opportunity. The fact that the Aussie's edging higher would give me the indication that if these numbers do come in a little bit stronger, we might see a little trickle to the top side, but it looks like it's already running out of steam. Now, retail sales figures out of Germany, definitely worth a bit of a look. See how, if they're buying bits and pieces, get some housing numbers here out of the UK. Then you get a bit of range of PMI data out of the Eurozone and the UK. Unemployment figures out of the Eurozone. We're not seeing a lot out of the ECB, although we did have higher inflation in the Eurozone, which hasn't really pushed the euro higher on its own. So then you come back down here, looking at the major numbers just to sort of look at. You get the weekly or the monthly ADP national employment number. Now, a lot of people think that's a bit of an insight into the non-farm payrolls. It's a different database. It sort of sometimes correlates, sometimes doesn't. It's not a strong enough correlation for me to say, keep an eye on this one because this will tell us what the non-farm payrolls is going to be. I don't see that. And then two key numbers here, construction spending and ISM manufacturing, right? This could give us, these are like sort of tangible numbers that if they sort of match up, could give us start to get the dollar beating one way or the other, right? At the moment, it's drifting lower. So once again, focus on the easy opportunities. If these numbers are weaker, right, it goes with the current short-term down move in the dollar. That is an easier trade than if the numbers are strong, trying to fight this short-term weak dollar sort of trend, right? And that's where we are. So you basically just match up the data. These come in weaker. The dollar is already sort of drifting down. It goes with that down move. That's why it's an easier trade. Would I be selling on a rally if those numbers were strong? Probably not yet, right? As I said, the real big piece of information we're waiting for is the non-farm payrolls on Friday. And up until then, you've just got to sort of roll around with the punches. As I said, I think the charts indicate to me that we're just reloading for a potential dollar move to the top side. We've got good resistance levels to work with, support levels on the downside and all these other pairs. And you've also got some resistance lines here in Euro, Sterling, Aussie and Kiwi. You got support lines to work with. So all you can do is wait for that opportunity. Now, dollar CAD, it's a little bit in a bit of a dog's breakfast here, just drifting sideways. We do have OPEC. OPEC are having meetings today. I think that's a twice annual event. So just keep an eye on that. If they start talking about reducing or increasing supply, well, then you're going to get a shift in oil, and that's going to impact dollar CAD. Sort of two safe havens, the Swissy and the yen, just drifting sideways, right? So I'd be keeping a close on dollar CAD today. If you can see some updates on the OPEC issue, you can see this trend line here. It's really steep. I don't really like it, to be honest. I'll just adjust it to the current high. But as you can see, dollar CAD is just drifting sideways. So the pairs in focus, definitely Euro, a little bit of Sterling. We've got Aussie GDP figures. It's a little bit iffy. Kiwi, well, it's just tracking higher. And don't forget the Kiwi, the RBNZ has already told us they are on track to be raising rates later in this year, whether it's next month or the next coming, or hopefully next month. But that will depend on the lockdowns. If the lockdowns finish, or like New Zealand says we're going to open everything up, I'd expect a pretty like 100-point rally in the Kiwi, because that would mean the RBNZ are on track to raise rates at their next meeting, right? So the Kiwi very closely attached to the lockdown issue, its fortunes. And that's pretty much it. Keep an eye on the dollar. As I said, we've got US numbers coming out. The easiest trade is still to the top side for the dollar block, because these pairs are trending higher short term, and the dollar index lower. The Swissy, let me just change the color here. Swissy, yen and dollar CAD sort of out on a loop at the moment. But as I said, OPEC here today could really give the dollar CAD a kick in the belly. And that's pretty much where we are, guys. It's, you just got to remain patient. Big numbers on Friday. And don't forget, they aren't going to be easy. There's loads of data coming out. But what we'll get out of that, if we get a conclusive, definitive, strong number, well, then we're starting to push the Fed into the corner where they have to start reducing or tapering their asset purchases. And that's a step closer towards higher interest rates. And that's where the bigger move or the overall medium-term trend will come from. So, excuse me. So just hang in there for the time being, right? Keep an eye on the US equity futures. That can give us a bit of a lead into trading in the Asian session, especially the Asian session, early Europe. And these are actually starting to move higher, and quite noticeably the dollar block moving up and the dollar pairs moving down. So that sort of sets the tone for the moment. You want to keep an eye on this. If the US equity futures turn around, well, then we may see the majors turn around as well. But if these moves continue to increase and they get up to like 0.5% up, etc., you're going to see Euro, Sterling, Aussie, Kiwi continue to move higher and the dollar pairs lower. All right, guys, that's it from me. Have a good trade day, and we'll catch you later on. Cheerio.